and gentlemen. My name is John Needham. I'll be your host for today, and I welcome you to this Danielcode tutorial, and I congratulate you on being positioned as a trader in likely the best market we've ever seen. Quite extraordinary what's happening in equities and crude oil, of course, gold. We had a massive $95,000 trade per one contract. It's been a wonderful, wonderful time to be a trader. Yes, welcome. Wonderful to have you here. Any questions you have, please type them into the question box and I'll deal with them as we get there. Okay, so let's have a look what we've got here. And all our wonderful, wonderful stalwarts are here. Justin's with us. Greg Palladini's with us, which is great to have you, Greg. Justin, Jeff Sherbrune, a farmer, wonderful, newish. No, he's actually been a trader for, been a Danielcode member for years and years, but just quite recently took the tutorial and got into it. Mal's with us. Of course, Mark L is with us. Wouldn't be a party without Mark, one of our longest Danielcode supporters and one of the very best traders that I've had the pleasure to be able to teach him and help him and enjoy his success. It's wonderful stuff. Okay, so let's get started because there's just a whole lot to talk about. And here we are going to click around here and show you some of the magic. The title of this webinar is Catastrophe, and it's not yet. It hasn't arrived, but it's brewing. Rumblings are now being seen, and it is inevitable that a lot of what's baked into the systems is going to be carnage. I've also highlighted in this particular presentation the comparisons between the US and Australia, two wonderful countries where I've lived and enjoyed so much. Gig has joined us. Welcome, Gig. In North Carolina. Wonderful to have you with us. Pietro's here, many others. It's just filling in now as we go. So I wanted to just show you to start how amazing these equities markets are. And we've got all of them near all-time highs, which is extraordinary. Amazing and makes for absolutely wonderful trading. This is the S&P. You can see our most recent trades. They're sort of about $25,000 in 3 trades. Remember that when I'm talking about any results, I'm referring to one contract per one contract. Of course, you can trade as many contracts as you can afford, but these results vary greatly between the various markets. Some of them have relatively high margin and big dollar value, whereas you could compare that with, for example, some of the grains which have very small margins and therefore commensurately smaller dollar results. And you have to keep that in mind because the biggies are always more exciting visually, but the dollars work exactly the same. And of course, for the same commitment of margin, you can trade many, many more of the contracts that have a lesser margin value. So there's our recent and current trading. The unusual thing is about today's trading, folks. I'm going to talk to you at the end about a very, very important subject, day trading, which has become so important. And I do need to share those details with you. Traditionally, I haven't been a day trader. I was way back in the day when I was a younger man. much younger. I can tell you time marches on for all of us. But I went off that day trading and developed the Danielcode system based entirely on daily bars. Nothing shorter. Well, for the last 18 months or more, I've been talking to you about the ranges that we're seeing as a going concern in so many of these markets. And it's made the proposition of day trading, in my view, irresistible. Now, day trading is very much a personal choice about lifestyle and culture. And I want to share with you why it's so good for me and the possibilities for you. So do stay with us till the end. It's the last topic I'm going to discuss today, and it's very, very important. I know for the vast majority of you, you're well set in your ways. You're trading daily bars. You don't want to change your trading, nor do I suggest that you should if you're happy with it. But I do want to just highlight to you this other opportunity, particularly for newcomers to the business, newbies. Sarah's not with us at the moment, but she's a young lady who's been doing her TTT video tutorial, and she can see the obvious advantages of being a day trader. So I'll get to that at the end. Let me tell you all about everything else that's happening now. This is the incredible NASDAQ. It should be called the mighty NASDAQ. It's amazing the way it's been weakening off, and all of a sudden we have this massive rally up to new all-time highs. Quite extraordinary. And you can see from our normal Danielcode trade signals, there's a $31,000 trade that's just closed out in the NASDAQ futures contracts. Big money and really simple Danielcode trading. If you know Danielcode trading, you'll understand all of this. If you don't already, please drop me a line. I'll be happy to teach you either with our traditional one-on-one trading method or just the alternate, which is our TTC, Teach Yourself to Trade video trading series. You've received with your invitation a copy of a summary of the various courses that we offer. If you haven't got one handy, just go to the Danielcode website and you'll find that document prominently on that website. So here's crude oil, and I've left out the biggie that you can see at the left-hand side of this one. The short trade on that, which was a Danielcode TO3 trade signal and a success signal, we finished up getting stopped out for, I can't remember what the money was. It was massive, absolutely massive. But you got to be very careful. There's a whole lot of people, very experienced, very well-known people who've blown up trading the crude oil lately. It's very volatile. And it's like all futures trading. It's a sharp-edged sword. It cuts beautifully when you've got it right, but it can also cut against you just as harshly. So don't trade these highly volatile, big bar margin markets unless you are a competent trader. Remember, when we're talking trading, I'm always talking about safe and competent. You need to be a safe trader. Part of the skill of learning to trade Danielcode is the embedded safety measures in it, the discipline that you're required to create and endure. Look at this little beauty. By now I should have cleaned off that short trade, which was 90,000. We got stopped out on the big bar, the final bar, because by then, of course, we had a trailing stop. And we got stopped out for about $90,000 per one COMEX gold futures contract. Incredible stuff, isn't it? So let's move along, because what's underlying what I'm talking to you about today is the silent thief, inflation. And those of you who are regular Danielcode clients who come to my webinars all the time, for which I must tell you I'm most grateful, will remember back in 2025, perhaps late 2024, I did a couple of webinars talking about inflation and the fact that the government statistics are basically created to give information to the central banks that largely control the official interest rates. And it's designed, the official measure of inflation, to create a really stable value. They don't want it jumping up and down, and they're not making changes to the interest parameters every 2 weeks. So by design, it excludes almost all of the volatility. So that's the purpose of it, but that's not what real inflation is, or what I call household inflation. They're entirely different things, and one is not like the other. And real inflation, household inflation, is what you and your family, excuse me, are experiencing every day. The cost of everything seems to be absolutely astronomical. The cost of groceries is just ridiculous. The price of petrol, what you would call gas, in Australia, of course, where we have a non-admitting but actually factually a socialist government. It has taxes so high on gas and many other things, cigarettes, absolutely ridiculous. I used to be a smoker. Occasionally, regrettably, I still am. But a packet of cigarettes, I was in Fiji recently, a packet of name brand cigarettes is about less than $2 a packet. Here, it's $40 a packet of 20 cigarettes. Absolutely ridiculous. That is inflation. That is government-induced inflation on top of the normal spending method that causes inflation. And you think about your costs, your building costs. If you're doing any renovations, excuse me, to your house, your office, whatever, you'll know what I'm thinking of. Tradesmen are now the new millionaire class. These guys that are on $150, $180 an hour or more, with their skill being a trade, they're and maximizing their deductions, they're wealthy people, certainly in this country. And of course, that reflects into the cost of buildings, the cost of buying a house, the cost of maintaining a house, everything else. So what I call real inflation is what you see in cost, which effectively is purchasing power every day. And it doesn't go far anymore, does it? And it's striking. In America, I know there's a huge ongoing dissatisfaction amongst voters about the cost of living, the cost of everything. In Australia, it's the same thing. It's ridiculous. Young people are literally priced out of owning a home in a capital city in this country. If I told you that the average price, you're going to find it hard. Think of the average. It's not very fancy. It's just ordinary. In Sydney, our biggest city, it's over $1 million for a house. Over $1 million. How are young people going to afford that? I was talking to my daughter the other day about buying a house. She's at that stage in life. She's a doctor. She's a third-year doctor. She's doing her specialist training as a forensic pathologist. Not many people do. Very, very few in the country, to be honest with you. But it's a strange choice for a very pretty, quite small, lovely young lady. but if you knew her background, that she's her loves, her hobbies, I should say, are competitive shooting, shotguns, and throwing knives at targets, pole dancing, add that to a strange list. And most of all, she's a very, very clever young lady. She actually did her PhD, her doctorate, from Bond University when she was 26, as I recall. And one of those was a gap year due to COVID, where she was very restricted in her teaching, attending teaching, etc. Mentoring is what you really get with when you're doing a doctorate. But she got her PhD at 26, and then she was teaching at Bond University while she was doing her PhD. She was lecturing, and she loved it, and she's very, very good at it. And when she finally got her PhD, I was thrilled. I said, "Well, then you're fixed up. You're right for the rest of your career." And Bond is a comparatively new university at the Queensland's Gold Coast, the centre of most things wonderful. And it's a very pleasant experience because it's a private university. And you've got a career as a lecturer there, which is a wonderful thing. You get paid a lot, you get extreme valuable add-ons, superannuation or 401 type of benefits, etc. And that's my job finished. Well, she said, no, Dad, that's actually not what I want to do. I want to be a doctor. So she started off as the most highly qualified student in the field of medicine. She already had a doctorate, but she went back to doing beginning another university degree in medicine at Notre Dame, which you in the States will know well, a leading teaching institution. And on her salary now as a third-year doctor, when you start writing down the sums, the figures, the cost, the interest rate you're going to pay over the course of the loan, it's absolutely scary, absolutely terrifying. She's in a very privileged position for her, of course, and she has the bank of mum and dad, as they call it, to help her do the things she wants to do. But for most people, very hard. It's a real issue, and it's no doubt the issue that's going to get the existing governments in the States and in Australia tipped out at the next election. I think that is looking increasingly likely. So let's continue with that idea. This is a screenshot from our last webinar, slightly amended, and it was about the panic that started when the war with Iran broke out and the Straits of Hormuz were closed. And the Straits of Hormuz, I'll show you a map of it shortly, is a narrow piece of waterway in the Middle East, around the Arabian countries in particular. And the world's oil supply, almost 25% of it, or 1/4, actually has to come through those quite narrow straits. I think they're only about 20 miles wide, or something like that. And as part of what's going on between the US and Israel as the allies against the country of Iran, has put a complete chokehold on that 25% of oil. Bits of it get through, but not much. And it's super disruptive. You can see from the price of gas in your country, petrol in our country has more than doubled. You're looking at perhaps $4 a gallon for gas in the States, in some parts of the country. Here, we're approaching $3 a litre, and it takes a number of litres to make a gallon, which will put things in context for you. The other big issue, the big sleeper issue that's been going on, not a sleeper issue for people, traders, we're well aware of it, but for the public in generally, is the issue of software against AI. And what we're seeing briefly is we're finding the value of software applications being absolutely decimated by the belief, in some cases obviously already proven to be correct, that AI applications will eat what the software applications have been able to do. So we've got significant weakness in software stocks and markets. And of course, the AI narrative, which has been boosting this whole recent run up in our wider equities markets and perhaps others. You can't quite see the direct link with gold, but it's there. It's just decimating the value of software stocks. So the semiconductors versus software is a chart very worth looking at. So, private credit. I raised this with you perhaps 3 webinars ago, 6 weeks, maybe even a couple of months, how it was a huge market that's grown massively over recent years. And it's a opaque market. There's no formal market trading in these securities, which is securitization of private credit loans. It's called private credit. And there's no easy reference point to value them. So, of course, without real available valuations, the ability to mark to market, which is done with other securities where there are visible and available markets, is very limited. And this is the whole story about the 2007 to 2009 crash in US equities and many other markets as well, that if you don't have a clear ability to value these assets on an empiric basis, in other words, mark to market, as it's called, you know what the value of equities is, you know what the value of significant loans, commodities, everything else is, markets, public markets available for a great many of them. You can have confidence in the valuation that's put on the balance sheets of the various corporations involved. With private credit, a bit like the mortgage securitization issue that caused the 2007-2009 crash in equities, it's very opaque. There's no actively traded market. So you've got the promoters of these corporations that are trading and investing in private credit loans. You've got the promoters valuing their own assets, which, as we know from Enron, Lehman Brothers, on and on and on it goes, is hopeless. It's the road to ruin. And private credit has been starting to see that. I brought it to your attention very early, and there was the first issues of ripples of problems with Blue Owl, finding that the real value of their loans was considerably less than the book value. And they have most of the corporations that run these businesses, they have a fixed methodology, often in their prospectus or conditions, that they will provide a certain amount of liquidity for people who want to, for various reasons, redeem their investment. And that's normally pegged at 5 or 7%, and they're obliged to provide liquidity for that 5 or 7% periodically, quarterly, half yearly. It all varies somewhat. But what they found, and where we've got to now, is that the request for redemption has been as high as 42, 44%, way above the required 5 to 7% liquidity that's in the Constitution or terms of trade of these businesses. And it's not been on the front of mind at all. Events, particularly oil, what's happening with its dramas in the Straits of Hormuz, has kept it off the front pages, but it's got worse, and it's a big sleeper issue. And it's a sleeper issue because this is the same thing that caused the 2007-2009 crash. This is the same thing that caused the dot-com crash from 2000 on, is the inability to really value the asset at arm's length. And that's going to become more obvious publicly as time goes on. The Mag 7, the Magnificent 7, the 7 big super AI providers and in tech markets, they were subdued for a while, but of course now they're violent. They're back to being violent, and FOMO, fear of missing out, is driving it. And the NASDAQ, of course, new all-time highs on Wednesday. Just extraordinary. I'll show you the chart. The Trump and Israel issue is just, I guess, it's really a function of Trump's personality, that he's quite demeaning to his allies, of which Israel is the most important one, particularly in this current conflict with Iran. And that just seems to be a fact of life with Mr. Trump. Overshadowing a lot of this for Americans is the US midterms coming up towards the end of this year, and that's much closer than you think. And there is great dissatisfaction with some of the actions of the present administration. So all of that's going to come out in the fullness of time. This issue of the Iran war dominates a lot of front of mind thinking. And there's sort of some basic issues about it. Iran, the war was not fully explained to US populace. Congress would not explain to them. They're not on board. The people who have the constitutional powers of declaring war or otherwise were simply not informed. And as a result of Trump's actions, while this conflict's been developing and going on, his ratings are falling off a precipice. It doesn't bode well for the midterms, which are getting closer. Additionally, Trump's Republican Party, the US has basically a two-party system, Republicans and Democrats. Australia has pretty much a similar system. We have two parties between Labor, which would be the equivalent of your Democrats, and Liberal National Party coalition, which to some extent would be closest equivalent is the Republicans. So with Trump's tiny majority in Congress, the fact that he's been able to do everything he's been able to do, and he's done a lot, and a lot of it's been very, very good for the country, very sensible sort of approach, has been the miracle of not having oversight by Congress. He's managed to achieve almost everything he's wanted to achieve by issuing presidential rulings or documents lining out policy and policy changes without the vast majority of the time congressional approval, which is the big difference, I guess, between the American legal political system and the Australian political system. America has vested by its constitution huge power in its president, and if he does have the support of his party, which is the Republicans in this case, he can pretty much do what he likes, subject to the Constitution, which is overseen, interpreted, and presumably enforced by the American Supreme Court, the highest court of appeal in the country. So there's a high probability of disastrous swings against Trump coming down the track, and the underlying issues of the cost to the US. And a whole lot of this is not just profligate spending, which has contributed to to inflation, but the fact that real household inflation, which is what voters experience, voters like you and me, we have to live with it every day, and it's not nice. It's out of control in some cases. It's absolutely ridiculous. And of course, one of the underlying issues going on with the present ceasefire in the US Israel versus Iran issue is the massive amount of stores of weapons that have been expended in this huge high technology warfare of modern times. So private credit gating is accelerating, and I've explained to you recently it says to be about 42%. So this is the Straits of Hormuz, and what happens in there. You can see um, uh, uh, Iran, Iraq, Kuwait, Bahrain, Saudi, Qatar, UAE, which is Emirates, Dubai, etc., have all got this situation that their oil, nearly all of them are significant oil producers, gets to the world by going through this narrow isthmus, if you like, which is called the Straits of Hormuz, and that's controlled absolutely by the IRG, the Iran Revolutionary Guard Corps, IRGC, and they're holding the rest of the world hostage, and in more ways than one. They're charging $2 million just a click here, clip the ticket fee for big oil tankers going past there, of which there are many, many, many. And of course, we'll see how that all progresses. So the US and Australia have a number of similarities. Both countries are democracies where government is chosen by representative voting. In Australia, it's a little different because we have compulsory voting. You have to vote whether you want to or not, which leads to what's called the donkey vote. Masses and masses of people who have absolutely no interest in politics are still forced to go to the poll periodically whenever there's an election on at state level or federal level. And if you don't turn up, you're fined. And the government's after you for not voting, of course. And you have to have photo ID, which seems to be so controversial in America because there's a historical reason for some of it, but it's promoted by at least one of the major political parties as a way to have the US version of the donkey vote, which is many, many people are gathered together by promoters, activists, who help make sure they do vote, that they'll bust them to the airport, etc., etc. Not going to the airport, of course, I'm sorry, misspoke, to the polling booth. So we both have a basic two-party system. We both have, America has its Congress, which is two parts. The lower house is the House of Representatives, which I guess is sort of supposedly the political riffraff, and it has the quite different Senate, where senators are much more likely to be gentlemen, and that's promoted very much as part of the cultural system. Australia has the same sort of thing. We have two houses. The House of Representatives is the lower house in Parliament, and then you have the Senate. A lot of it modelled, of course, on the US Constitution. The difference being, of course, that in Australia, pretty well all politicians are rat bags, whereas in America, I guess you can say that some of them are. We'll leave it at that. But we both have the same debt issue, which is the underlying issue at the end of this inflationary madness that's going on. The debt of both countries is ludicrous. And for Australia, it's comparatively recent. And that's a function of a semi-socialist Labor government. They don't believe in markets. They don't believe in markets as a mechanism for solving social and economic issues. They do believe in direct government intervention everywhere, all the time. And the people who are providing this, whilst largely they're the permanent bureaucracy, what's called the permanent government of Australia and the same in UK, is this massive bloated bureaucracy we've got, where in Australia, every one in every three people is employed by a government at some level, federal, state, um, council, which is a sort of a subset of cut-up areas that have a right to have a representative to whichever level of government, 1, 2, 3, 4, that you're talking about. And the states have very, very considerable powers because of the way the federal system in Australia was designed, which is as a template, basically, the parts of the US Constitution. And in the states, of course, there are much more cultural differences between states because of history, predominantly the cultures that led up to the American Civil War. And I've had the privilege of living both in the South and the North and in America. And honestly, there are times you'd swear you were in a different country, but there we are. But both of our countries have significant debt issues and inflation, this sleeping monster that is devouring your hard-earned dollars. It's not good. Now, I'm going to spend a little bit of time just showing you some history of markets, because history is a gift. When you understand markets, you can simply, by looking at your charts over long periods of time, you can see everything that's happened. And that also tells you the probabilities of what's going to happen in the future. This is a 6-day chart, which is the smallest of our long-term charts. We use 6-day, 12-day, 24, and in some cases 59-day charts, where each bar is made up of 6 trading days or 24 trading days, etc., as the case might be. This is oil. You can see the massive spike up to near $120. This is crude oil. There are various categories of oil, of course, but this is crude, which is the one we trade. You can see just how volatile and dynamic that market's been, and a very significant hedge fund has filed today to say they've lost 24% of their total capital on leveraged oil trading. So as I told you, the edge of derivative trading is sharp, and it cuts both ways. Here's the S&P, absolutely extraordinary, making new all-time highs. Here's gold, which of course has been the story everyone's followed. You know, I mean, up to right where the blue Danielcode blue line was at $5,638 US dollars per ounce. Absolutely massive movement, absolutely extraordinary. To put that in perspective, you can see that one big bar down there, pretty much in that trade, we made $95,000 per one contract before we were stopped out on the short side. Wonderful trading, folks, and this is something you need to always and continually be aware of, and this is what's happening with UST bonds. I'm going to take you to a much larger chart in a while and talk to you more about it. And this is it. This is an amazing chart. It's also a piece of history. I started running this chart years and years ago, and if I put my glasses on, you can see that this starts way back before the start of 2093. And the significance of this chart is that all of these red lines that you can see diagonally going across this chart are the basis of the Danielcode trading channel, as we call it, and the extensions of the Danielcode trading channel. And that red line there, you hard to see it, but it actually stops the solid line, which is the part that I've created over the years, and I've been showing you this forever. The start of these Danielcode trading channels, which are manually created by me, we stopped moving that channel in September 2017. Maybe earlier, maybe 2016, I think. Yeah, we stopped moving it. Everything that the market's done since then hasn't been touched. Those red lines and the dotted lines up above and below the central line are extensions or reductions of the mean, not the normal mathematical mean, but the special mean, which is the Danielcode mean, MEAN values. And it's extraordinary. You can see here that we start off with what happened with the then US Fed Chairman, Paul Volcker. And more recently, you can see how we've charted this stuff, that it made its high at 1, 2. Here's the central one, is 1, 2, 3. 4 standard deviations from the mean above the mean, Danielcode deviations. And this is 6 standard code deviations below the mean, which has given you the low from 2000 and late 2024, early 25. And look how it's tracking this dotted line along the bottom, the lowest one of them, 6 deviations from the mean. And that's ultimate support. And it's extraordinary. And think about it, because I'm going to talk to you more about it as we go. And you can see how perfectly the Danielcode trading channel, the blue lines, the newer ones on the right-hand side, define the whole pull down from 2019 on, and how each of these levels provided support on the way down. And that itself is a massive issue, which I don't think is being completely addressed yet, because the Fed kindly changed their rules about accounting and how you'd have to continue or account for those additional massive dollar losses in there. And they changed the rules to allow investors to hold more of them on a until maturity basis, which is just a trick, you know. But remember, whenever we're talking about funding and the government of any color, US, Australian, doesn't matter, they're all the same. There are all sorts of methods of displaying financial data to show pretty much the purpose you want. And the dollar value of what's called the off-balance sheet items by the US and America, who we happen to be talking about at the moment, are absolutely massive and unrecognized by the public at large. And of course, there's the occasional economics commentator who wants you to bore you with all the detail, but it's not a popular subject in mainstream press. Okay, let's keep moving because time is moving on. So here's copper. Interesting, it's had a extraordinary run up since 2002. And the recent leg up, of course, is very much in sympathy with gold and silver that have been massive. Here's natural gas, just in case you think there's any critical energy shortage worldwide. It's just bumping along the bottom of the chart. Shows a spasm of excitement in 21. Nothing much at the moment. It's just sitting there being quiet. So here is the mighty NASDAQ. And I've got a chart here. Now, this is one of our super long-term charts. This is a 59-day chart, or other words, there's 59 trading days in every bar. And I'll be able to show you this running from 2000 to date, the last 26 years. Look what it has wrought. Absolutely incredible. I mean, this thing is parabolic. If you try putting trend lines along the various lows. It's an elevator, quite literally. It's just up, 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 and as I say, made new all-time highs this week. Here's the Russell. It's been a bit of a sleeper. Occasionally you'll have seen notes that the Russell was boosted up by one mechanism or another. Often enough it's buying shorted stocks and getting a bit of a ramp going. We've got two very significant blue arrows there, one of which was 2 bars ago, and the next one comes in the next bar, the next period, which is later this year. You can look at these as quarterly bars, if you like. 59 trading days in each bar equates not far off a quarter of the number of trading days during the year. Here's the Dow, of course. Not quite as dynamic, but boy, it's been steady and it's been steep, the growth, hasn't it? Quite a wonderful tool for investors. Here's a few notes in history that is why I'm trying to show you some of these longer term charts. You can see the significant ones, and I've just slapped down a few that come to mind. The first one, September 1998, you can match that up to the charts of the UST bonds that I've been showing you when Paul Volcker slapped down on, excuse me, the high levels of 10, 11%, excuse me, much less than we're having right now in real household inflation. But you can see that massive, which is the start of the UST bonds chart that I've been showing you. Look what happened. The answer is not much. We had a 2-bar correction, which is about 6 months on this chart. And then up it went. It was in the dot-com bubble, all the way up to make its high in late 99 with the top of the dot-com. The pullback of that, the run up to the 2007 high, which led to the 2007-2009 crash low in equities. It looks insignificant now, doesn't it, because of what's happened since? But boy, they were a big deal at the time, I can tell you, during the equities crash. That was the mortgage securitization crash, basically. They were jumping out of windows, very high windows. It was bad, very bad. And you can see the significance of our little peak COVID, the COVID flash crash, lasted just 24 days. And the answer with this market is up, 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 and more up. So things have never been better for investors, and particularly for traders. If you're a trader, that's the best thing you can be, because the antidote to inflation is trading. You become a trader. All of these things like super values and much, much higher, much bigger markets, they're all built in to your trading. And these markets, I say, are nearing all-time peaks, many of them. The daily bars are massive. I'm not sure they can be ignored. So worries about the price of petrol, what you folks in the States call gas, are subtle. You folks are worrying about the price of gas. In my country, Australia, we're worried about having any of it because we have a ridiculous situation with the Labor government in particular that's so neglected liquid resources that we have tons of oil, huge amounts of oil already discovered and proven. I think we have the second biggest production of natural gas in the world, sitting in the ground, a lot of it. The big issues haven't been, the big deposits haven't been developed because of this mad socialist, woke, green machine that you can pollute the whole landscape with these horrible, great big wind turbines, all made in China and imported at great expense, I should tell you, that can just populate the whole countryside. Quite horrible. and sun, solar power. And Australia has, where parts I live at any rate, has a lot of sun, a lot of sun. But the sun doesn't shine all the time, does it, folks? And what we're really learning the lesson is that liquid fossil fuels, petrol, diesel, nat gas, etc., in its liquefied forms, are vital to the country running. We've got hundreds, literally, of petrol stations in country Australia. They don't have any gas. They don't know when they're going to get their next gas. You've got the government scrambling because we have 2 oil refineries in this country. We discovered oil in the Bass Strait and inland Australia decades ago, but the Bass Strait deposits weren't that big. They're still running, but not much. But our 2 refineries we have are so run down over the years. No government support, no government approval for anything you want to change, because they've just been mad on this green agenda of these rotten-looking windmills, wind farms. They just go on and on. Some of them are huge, it's dreadful. Solar panels, exactly the same thing. But to the extent that we don't have an effective oil industry. And the 2 existing refineries we have are small, very out of date, have not had the required investment because the government's been so against it all. And it's biting now. We are literally, quite literally, at the other end of the world, waiting on fuel to come down in ships, most of it from Singapore, now Argentina, and also the government signing agreements with the US to import oil. And big cities, Brisbane, the capital of the beautiful state of Queensland, where I live, it requires a tanker every 2 days. So the government's got this endless array of tankers right through the Pacific, just bringing oil into Australia, and that's our lifeline. So, of course, prices have doubled. They'll finish up doubling again before much longer. And the question is, 1 or 2 of those ships have troubles that can't meet a schedule. We're right on the edge about availability of petrol, or gas as you would call it, and it's not going to take much to tip us into a seriously bad issue. So when you think you've got troubles with the price of gas, give a moment to think about us poor suckers down under who worry about whether we're going to have any or not. So this is just to highlight those of you who are interested in learning what I talk about, learning about trading financial markets. You could go to the website and see under our list of TTT, or Teach Yourself to Trade. It's a short video series. The videos generally less than 90 minutes. And you will learn everything that I talk about here and teach you, and much more to come. So here's this long-term US T-bond chart again. See the red, the blue writing on it, and the blue line across the page. I've said we are here. The low of that bar back in 1999 was 110 correct 12. That little arrowhead you see on the price of CBOT markets, basically, this is one of them, is called a correct, and 112 points and 12 ticks, 32 ticks in each point. But look at that. That's where we were back in 99. Look where we are now. There's a straight line. The current low, which was a few months ago, but we're not that far off it, was 110 correct 1. Contemplate that our interest rates on our official government debt are now the same as they were in 1999. Yet our markets have disconnected. Stocks, equities have disconnected from debt entirely. Look where we are. Start thinking about what the next level of support is if it drops through the existing dotted red line that's holding it. 1999, 2026, the same. Doesn't make sense, does it? There you are. Something more to think about and perhaps worry you. In the middle of all of this magnifications in the equities and market and bonds, etc. This is the US dollar index. Look how stable it's been. It's been sitting on that 95.03 Danielcode support level for 1, 2, 3, 4, 4 bars, each of which is 60 days. That's a year. That's pretty much a year. Very stable, sitting there. The underlying threat is BRICS, which you can read about, which is a main attempt by China to get its parts of interest, its parts of control off the US dollar standard, the oil standard, and onto their new currency. Of course, there's many, many reasons for that. I can talk to you about that forever. It's not important at the moment for this webinar. What's important, these are your projected US budget deficits for up until 2034 by year. This is just the federal budget. This is just the publicly released federal budget. This does not have in it all the any of the off-budget items, which themselves are as big as the formalized economy that you see government statistics for. You should be scared because it is scary. And there doesn't seem to be any, well, certainly not under this existing administration. They're spending it as quick as it can be printed. There's no effort for debt control or for any control, personal control, federal control, or otherwise. And you can see it's now exceeded $39 trillion, which is a totally meaningless number to most of us, but it's more than 1.25 times the country's gross domestic product. And that is scary. And you can see from the trajectory, there's no real effort to get this debt under control. And in the present administration, they're the antithesis of control. So here's what's doing to your interest rates. This compares federal funds to the 2-year rate. So this is a statement about Australia from a gentleman called Peter Costello, who was the treasurer of the government in the Liberal Country Party coalition government. And he, together with the then Prime Minister, John Howard, made a massive, massive effort to get Australia's debt under control, believing it was dangerous and damaging to future generations, is how they usually talk about it. In reality, with the inflationary expectations built in, it's damaging to the present generation. Don't worry about the future. And estimates interest payments alone are going to be $25.5 billion. Now, to put that in perspective, remember that Australia, as a country, is almost the same size as the continental United States, but large parts of it in the center of a desert. But we have a population roughly about 1/10 of the US. Yet we've got a $25 billion debt. It's not just scary, it's ridiculous. And Costello recently, in an interview, said it was heartbreaking to see the debt soar after his effort to clear it, arguing the enormous figure has put young Australians in a significant worse position today. He says, we got our budget under control. We'd eliminate Commonwealth debt. We're a shining example of a success story, right? In fact, what happened, he continues, is the year after we left office as government, they, the Labor government, started borrowing again and has been borrowing ever since. And that's literally true. And we join the United States as having a major and significant debt problem. And this is what it looks like in a chart. So let's take a break there because I want to talk to you about day trading. Excuse me. I've told you on a number of occasions that 18 months, maybe 2 years ago, I started to teach my son to trade. And he's a very clever young man. He's got 2 university degrees. And he is passionately interested now in trading. which is something that's just arrived in his life recently. I guess he's all of a sudden being a young man with many interests and requiring money to spend. The penny's dropped that one of the things that he is capable of doing, because his father is teaching him, is to trade markets. And he's a young man in a rush. It's all go, go, go. So he wanted me to teach him about day trading, which I hadn't done for the last 20, maybe 25 years. So to enable me to teach him, I had to go and pull out all of my old charts and old writings and thinkings about the business of day trading. So the culture of day trading is entirely different to the culture that Danielcode is based on, which is trading daily bars. But all of that learning, all of that teaching, and the easiest way is to look through the list of TTT videos that we've sent to you with the invitation, or you can find it on the website. All of those skills transfer almost exactly into day trading. And we have a video on day trading, which you can take. And I'm not going to pretend to you that that video will make you as good a day trader as I am. But what it will do is it will show you in detail all of the methodology I use in my day trading. I've become deeply, deeply invested in day trading. I love it, which is a funny thing to say. But when I talk about the things that may interest you to be interested in day trading, part of it's culture. And my preference is alone. I'm a very alone person. I've never worked for, well, I've never worked for anyone, actually. I've always been my own boss, but I've never had exposure to a brokerage other than telephone conversations with Jerry Winter over the years. He's a wonderful, wonderful broker if you need one. I have no experience of the culture of trading rooms or anything else. I've quite literally sat in my own study over the years, and we're now talking over 30 years, and developed all of this Danielcode technology. And does it rest on the shoulders of others? No. It rests on Daniel and Daniel alone. So one of the things that's made day trading so desirable to me is the simple requirements, which I can meet because I have no technical skills, but I can buy a computer and my son will plug it in and load in whatever programs I use. And the amazing growth of what's called prop firms, P-R-O-P, firms, F-I-R-M-S. Google it. There's a horde of them. They're huge. Their numbers everywhere. And what they do is, they're all different, of course, but some of them will give you a lot of support. They'll teach you day trading techniques, the ones they know. They won't teach you Danielcode because they don't know it. And more than that, the thing that I really loved is they will put up the money for your trading. In other words, if you can convince them that you are a competent and safe trader, which you will be if you've learnt Danielcode, they will put up the funding for you. And all they require for this absolute, to me, incredibly generous approach is that you pay them a small fee, sometimes around 10%, sometimes less. And with Danielcode, you're always trading away from the crowd. Once you have a Danielcode trading system, you can make it on an industrial scale. Simply market tools now, the simple tools that are available, quite incredible. I have zero trading knowledge about trading technology. I never had a job in a brokerage firm. I've never been exposed to it. I don't know many of those people. In fact, I only know Jerry. That's it. But it's easy to find advisors. I can get my daughter or one of her friends, who are all young people, my son, in fact, they have all that IT knowledge, or enough of it for my purposes. They can set up your trading chart and what have you. And you can learn all of this from a Danielcode video. And what it finishes up as being, and I'm going to tell you very briefly, because we've got to wrap this up with 6-7 minutes over time now. I'm going to tell you how lucrative this is. But quite literally, it's your own private gold mine. You just dig it up when you want. Purpose of being, almost all these prop traders are after the programs they're offering, are day traders. And to be a day trader, you got to be flat at the end of the day. At 4 o'clock, you got to be flat, no positions. You're not carrying any contracts overnight, etc. And you also have to learn to trade with very, very small stops. But everything in Danielcode is scalable, and time is fungible. You can change the time of your chart. You can change the time in which each bar is created. And you can get those bars so they roughly equate to your risk level. And if you know Danielcode, you can read off what's going to happen next. And that leads to peace, harmony, no tension, just thrills and rewards, almost always. And what's attracted me to it so much, and I should, full disclosure, tell you that I'm being funded by a number of prop firms for day trading. What attracted me so much is not just the money, but the thrills, the excitement. I got bored, very bored with trading daily bars, 6-day charts, etc., because I've been doing it for 30 years. I've seen it all. I do the same thing every week. Thursday I update charts. Saturday and Sunday I do new futures charts, new forex charts, etc. Wednesday and into Thursday I prepare a webinar every 2 weeks. With day trading, you get action every day, and it's extraordinary. Let me tell you about today, which is an ordinary day. It wasn't a big range day, just ordinary, quiet and dull. Got going a bit earlier than normal, got going about 7 o'clock US time. Normally it's 9 or 9:30. I had, with my day trading, I had 7 trades today per one contract. And of course, I'm not trading one contract. I can assure you, you will average about $2,000 a day for 4 days of the week. Okay, that's the numbers. Your risk reward ratio is something like 6 to 8 times risk. This is my personal short-term day trading. I think I said I had 6 trades today. 5 of them were winners. 1 was a break even. A lot of money. Today was almost a $4,000 day, but we had some real volatility today. Yesterday, Wednesday, was just a drag, just a fight. Assume you trade every day and you make, let's say, around 2,000 to make the numbers simple, a day per one contract. So if you do that 4 days a week and you break even the last day, there's $8,000. And if you're Australian, they're US dollars, which is even better. So there's your $8,000 a day. Say $35,000 a month. You're up approaching $500,000 a year US. And that's for the smallest contract that these prop traders offer is $50,000, which lets you trade 3 S&P contracts. And you can have 100,000, 150,000. Once you've proven your ability to do it and to trade within their allowable systems, which are mainstream systems, you can't lose a lot of money on any one day. You can't lose a lot of money on any trade. You've got to really tightly control your risk management. they will offer you unlimited money, literally $1 million trading capital. You don't put up security. Your security is you've proven to them that you're a safe and confident trader, which is what the Danielcode would teach you about. If that doesn't excite you, I don't know what will. For me, as I say, it's a personal choice, really. For me, I'm loving it because I was really bored with trading daily bars, which I'm still doing. That's the backbone of our business. That's the backbone of my interest. I invented this stuff. I've learned this stuff. I've been doing it for over 30 years. But day trading gives you such a buzz. I mean, it's an absolute fizz. It really is. It's fast. It's great. And the dollars, boy, they add up. They multiply up. Do the math yourself. You don't just have to trade a $50,000 account. You can trade a $500,000 account if you're good enough. $1 million is not a huge amount. That's just what they publish. If you become one of their funded private traders on their own, hedge funds, which are behind most of these programs, the capital is very, very substantial. So for those of you who may think you're open to something else, give that some thought. I find it fascinating. I find it wonderful, and I find it super rewarding. I've got to tell you, I'm loving it. I haven't been more excited about trading for the last 30 years. Okay, so I've gone over time again, folks. I had a lot to talk to you about today, and I thank you for being with me. It's very kind of you. I love seeing you here. It's great. I particularly appreciate all our good old friends who've been with us for years and years and years, including Lockie, who arrived late, but here he is. Here you are, mate. There you are. And wonderful. Thank you so much for being with me. If there's any questions, do drop me an email, folks. jneedham@thedanielcode.com, jneedham@thedanielcode.com. Happy to answer your questions. Happy to talk about any particular topics that you're interested in at a future webinar. Just email me. Let me know what you're interested in. If you haven't already, do please have access. You have access to our free trials. Just go to the website and follow the prompt. And finally, this is our disclaimer, which I do really, really ask you to read and consider. If you don't know what you're doing, it's very easy to lose all of your money trading. If you do know what you're doing, it's very easy to make a lot of money quite quickly. But do exercise prudence, and the most important or best way to do that is take your Danielcode tutorial, learn as you grow, and progress those skills. Again, folks, thank you so much for being with me today. Most appreciative. I love seeing you all. And I look forward to hearing from you with any questions, issues, or anything else that you'd like. Thank you, Mark. I see you've got, maybe I haven't been able to enable you to post written questions, but I see your clap hands. Thank you so much, my friend. This is a new thing, of course, as a Luddite, Luddite, you can look it up if you don't know what it means. I'm the ex-chairman of the International Order of Luddites, and I hate anything new. I hate change. And GoToWebinar brought out this whole new program, which I totally made a bollocks of the last time, and I haven't got much better today. But I will improve day by day. Okay. Great, folks. Lovely to see you. You're all my old friends. It's wonderful. Justin, thank you, my friend, one of the greats. Dale, there's all of them. Mel, wonderful. Lovely to have had you. Any questions, let me know. Want to chat, let me know. Look forward to our next meeting. Bye-bye for now.